Michael is the manager of online loans for Open Financial Network. Here we'll see how Michael uses Business Process Management, or BPM, from IBM to enable business model flexibility, innovation, and efficiency. In addition, he gains business insights that help him take corrective action quickly. When Michael logs into his customized dashboard, he sees a combination of key performance indicators, or KPIs, and alerts specifically tailored for him. He quickly notices that online loan applications for the month have dropped below the target threshold and are only about 50% of what they should be. Other KPIs tell Michael that a significant number of applications are abandoned before completion. He can also see that his total cost of acquisition is going up. Unsure of the cause, he asks his staff to investigate. They soon find the reason. All customers for a new offering are routed through a manual verification process, even for small unsecured loans. This slows down the process, and many customers abandon the application. Those who do restart the process apply by phone or visit a branch at a higher cost to the bank. A further complication is that significant merger and acquisition activity means that not all branches are able to view the incomplete data from the online process. So the customer needs to supply it again. The customers are dissatisfied, and some take their business elsewhere. Using BPM, Michael can use plain business language to extend the process for small unsecured loans with automated business policies. Now, the loans that meet the established criteria are immediately approved in straight-through processing. He immediately sends the new process to his VP of Lending and his IT contact for approval and execution. Using BPM from IBM, IT is able to make the process accessible and visible to all channels, with no additional coding. Now, if the customer abandons the online process and decides to complete in a branch, for example, branch personnel can simply pick up the process and complete it. Now the customer is free to access whichever channel is most convenient. And Open Financial Network's IT is able to add or change channels with no additional coding, significantly reducing costs and enabling dynamic and innovative channel strategy. BPM from IBM gives Michael real-time visibility into this process. He can monitor KPIs on a customized dashboard and receive alerts for potential issues. In this case, Michael was alerted early to a drop in online loan applications and discovered customer dissatisfaction issues. Using BPM tools, he was able to diagnose the problem quickly, model process changes, and route the changes for approval and execution. He now has an agile process that responds to the changing business environment, yet still adheres to sound risk management principles. Streamlining operations and reducing costs in the loan origination process concerns Joan, Director of Operations. Studying the processing costs of various types of loan applications, she's noted that the origination costs for all loans are about 20% of the total cost of all banking activities. She also notes that the cost to process loans is variable depending on the type of loan and the channel. Urgently needing to cut costs, she sees this as a real area of focus. Joan meets with business analyst Denise and IT manager Kevin to discuss how they might streamline and simplify the process. They agree on 4 business objectives: reduce redundancy and exception processing, automate as much of the process as possible, make the manual steps more manageable, and conform fully to compliance standards. Most importantly, Joan is insistent that the changes are made much faster than the months it's taken in the past, for she knows that once customers go elsewhere, it's harder to win them back. To help her meet these objectives, Denise and Kevin are using BPM from IBM. BPM from IBM is based on both BPM and SOA principles and focuses on business-level services, functional building blocks that can be deployed flexibly to help build innovative new processes quickly and efficiently. Kevin and Denise are confident that with BPM from IBM, they can meet all of Joan's objectives, including schedule. Previously, a change like this would take months, often up to a year. With BPM from IBM, it can be implemented in days or even hours. BPM from IBM offers a range of capabilities to help with the different aspects of the project. Model and simulate the new process. Rapidly deploy and change the process. Monitor and optimize the process. Componentize and share or reuse the process components. Gain visibility and management over both the end-to-end process as well as each component. Denise has documented the various as-is loan application processes. Using BPM, Denise reduces the various channel processes to a number of discrete business processes and functions. This helps her see inefficiencies in one channel that can be resolved by implementing an existing process from another channel. For instance, Open Financial Network currently has an automated loan approval process for the web channel, but not for the teller channel. Denise is able to leverage the existing web portal process to streamline the teller process. She also notes that each time a web customer begins a loan application, they must enter data that the bank already has. She is able to reuse a process step from the teller process and implement it in the web portal to avoid the redundant step. With the visibility that BPM provides, Denise can replace groups of manual steps with new automated steps to be assembled from existing services. As she works, she validates the changes with stakeholders to ensure buy-in to the new process. Then she uses the model to simulate and optimize the process. With only a few manual steps remaining, she's delighted that the average cost for a completed application is about 10% lower. Joan immediately approves the new process, so Kevin and his team can start to deploy it. Next, they assemble the automated steps from standard services, and the model defines the way that the whole process is coordinated and managed automatically as it runs. By using BPM from IBM, Kevin and Denise can eliminate many of the time-consuming steps in implementing a new business process. This makes it much easier for IT to work with business people, who can be involved with defining and optimizing exactly what they need. And because the process is model-driven, it can be changed quickly and easily. With the new loan origination process deployed, Joan can monitor its performance on her dashboard. Now she can be proactive rather than reactive. She can visualize process changes to anticipate different situations in the future, and she'll be better prepared to manage market changes as they occur. Joan's boss, Tom, reports to the EVP of Sales. Tom has just been to a meeting to understand board strategies for the coming year. He has been put on the committee to formulate a plan for penetration of both emerging markets and a new line of business. After reviewing the results of Joan's flexible and optimized business processes, he realizes he can harvest those best practices and leverage them into growth areas more quickly. He can beat the competition to the punch. Furthermore, he sees where he can plug and play innovative new point solutions or services dependent upon each market's need. BPM from IBM makes it easier for financial institutions to define, manage and monitor important measurable objectives and target them using key performance indicators. Companies can adapt and respond rapidly to changing conditions with actionable insights and deploy valuable skills more effectively. Open Financial Network found that BPM from IBM allows them to make better decisions faster, streamline, harvest and reuse their core processes, and reduce risk through valuable process insights. These benefits translate immediately to increased ease of doing business, stronger top and bottom lines, and position them to leapfrog their competition. To learn more about BPM from IBM, visit ibm.com/software/innovate.